right, so I've been hearing a lot of talk about people in cash down when financing at the dealership. Some people say it benefits the customer, some people saying it only benefits the dealership. I'm gonna address it for you real quick in a couple scenarios when it's good and when it's bad to do. All right, scenario number one where you should not have to put any cash down. If you have really good credit and you're buying just like a normal car, unless you're buying some crazy like super lifted truck or sports car that's got like $30,000 for the add-ons, the bank's not going to finance a lot of those add-ons. But if you're just buying a regular car, truck, or whatever, you shouldn't have to put any cash down. Any cash down the dealer asks for you is a massive red flag if you have really good credit. Scenario number two, if your credit's kind of okay, this is kind of situational because banks buy off of two things: conventional lending, where the dealership sends your information into the bank. They have an actual person that sits there. Underwriting will look at it and they'll say, okay, you're either approved or denied. This is how much you need down. Sometimes they'll ask for some money down. If the credit's kind of iffy, the dealership still should be able to work with you. Sometimes they have to absorb a little bit of a fee. You can kind of work the dealership to kind of take on that fee because you are giving them your business and they're making money. So you can kind of try to talk to them to getting less money down. So scenario number two is kind of in a middle ground. You might have to put a little bit down, but you shouldn't be putting much down if your credit's decent. Scenario number three is if you have really bad credit or no credit, more than likely a pretty decent down payment is going to be required here. There's really not any banks out there that are doing zero down for bad credit or no credit. This is going to benefit you in the aspect of actually just being able to get the car approved. Sometimes in this scenario, some of the banks don't really lower the interest rate with more money down. Sometimes they can. It's situational on the car and everything too, and the exact credit score. Like I said, I wish this was easier just to give you a cut and plain cut simple answer, but it's just not. But generally, you're going to have to put a down payment down, and you're definitely going to want to have a down payment because if your credit's kind of bad, your interest rate is going to be higher. Putting money down is going to save you interest. So every dollar that you finance is going to have a certain interest rate. Usually with bad credit, you can be, obviously above 10%. In some states, they have a cap of like 18 to 20, whatever. Putting more money down benefits you because you're just financing less of that money at that higher interest rate. A lot of times too, I tell people finance this for a little bit, work on your credit, refinance it. You can go to any lending institution and refinance that loan and get a lower interest rate. Hopefully this gives you a little bit better grasp on it. I know not every answer is perfectly cut and dry, but unfortunately the financing world's a little bit more complicated than that. You can always just apply with your dealership or your local credit union and they can kind of explain the scenario for you. There's no problem with really shopping around a couple different banks within like a 30-day window. It really doesn't do a whole lot of effect to your credit if you're kind of shop around for that. It really damages your credit if month after month you're getting inquiries and hard inquiries. That's when it really starts to put a big damper in your credit. So hopefully that helped. If you like the channel, just follow.